What's up, everybody? Welcome to the Stocks channel. Today the stock market started to pull back from the price targets and we are now at critical support. So the question is it time for the bulls to buy this dip? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Volatility is back and we are finally seeing some volatility in this market with a 1.38% drop in SPY. And I talked about last night with the CPI data and hitting the price target, there was going to be this possibility that we were going to get a pullback into support, and then from support we could still continue this bull trend. Now looking at this chart, we filled the gap at 494, but because of the CPI data we did gap down, so we now have a gap to fill to the upside up there above 500. So we have gaps all over this chart, and we have gaps to the downside and gaps to the upside, and we still have a bull trend. And as you can see, SPY did bounce off of that support at 491. So there's still nothing on the chart from the price action that tells us this bull trend is over with. Now be very careful because there will be bears, and I expect a lot of bears to come out of the woodwork today that are going to start saying this was the top. But the thing I want you to pay attention to is that they have been calling every single one of these a top since we started this bull rally. And there were even bears coming out of the woodwork at the all-time high saying that we were going to double top from the previous all-time high, even though we blasted right through it and have a nice margin at a brand new all-time high well above the previous all-time high. So when you look at this chart, it is very easy to see how bears can constantly tell you that there is a top in the market. And if you believe they have the ability to call a top for whatever reason they try to convince you, it could scare you out of your long positions. And during a bull trend, if you look at this chart, every single time the bears were calling these tops, those were buying opportunities for a higher low pullback into support for a low risk long entry right there near that rising 20 daily moving average of support. And you can see today is no different. The bulls did start buying the dip, which you can see from that wick below the candle, and we did close above all of the moving averages except for the 5 EMA. So I'm going to make this very simple for you, and I'm going to simply zoom in on this chart and tell you should be bullish in SPY above 491, which means it's completely acceptable to buy this dip. And it's actually preferred as a bull to buy near support because you get a much better risk reward ratio. And I talked about this last night, how buying up here at 501 was not the play. You want to buy down near support. And then the very next day, the market gives us an opportunity at support for an entry. And just keep in mind that doesn't guarantee you're going to make money, because one of these days we will break down below support and we will lose the bull trend. What you need to understand is that the odds are in the favor of the bulls to buy at support and continue to push higher, because the trend is your friend, and until we break down below support, we have no way to know this trend is over with. So yes, there will be bears coming out and saying the market topped, and they're going to think they're geniuses because we had one red day. But again, zoom out on your chart and look at all of those times that we had red days and there were higher lows before the next higher high. So yes, one day we will slice down and we will break support, but we need to see it in the price action. And as I continue to tell you, I believe that is going to be the breakdown below 491. So pay attention to the critical support at 491. And if we start to bounce, you're looking for that gap fill at 500. And keep in mind, there is a scenario where even if the market did top, we could still bounce up for a lower high and then continue a downtrend at a later date. So even in the short term, if there is going to be a bearish breakdown, we could still bounce higher before we go lower. But right now, I do prefer the scenario with this bull trend that we're going to bounce off support and continue higher to another brand new all-time high. And then we will just simply get risk off if this is wrong and we break down below that support and start breaking down below the rising 20 daily moving average. So if we break down below 491, we're likely going towards a gap fill at 489 and then a gap fill just below 483. On the NASDAQ 100 triple Qs, we were down 1.56% today. And in the triple Qs, it was simple as getting a pullback down towards 428. And then from 428, the bulls need to hold this support and start bouncing higher towards that price target in the 440s. So just like SPY, we gap down. So we have another gap to fill on the triple Qs above 434. And you have two critical support levels in the triple Qs, 428. And if we break 428, we have a support trend line right around 423. And if we can't hold all of this support and that rising 20 daily moving average, then we're going to get the breakdown and we're likely going down towards 413 to 414. But right now we have a bull trend and we did hold above 428 at the close. So the bulls did show up at support, which you can clearly see from the price action on a very high volume day. If the bears and the sellers were stronger, they could have easily broken support with this much volume, but there was just too much buying pressure. And because we're in the blow off top scenario, there's also a lot of shorts that need to cover their short positions, especially at critical support levels within a bull trend. So do not give up on this bull trend just because we get a pullback. The pullback is a buying opportunity near the risk level. And even if we don't continue higher, you have very low risk to take a long trade within a bull trend. So if we start to bounce from this support, look for the gap fill above 434, and the bull breakout above 437 will bring us to the next price target higher above 442. In the Dow Jones, we were down 1.36% today, and the Dow Jones did start to pull back to the rising 20 daily moving average of support between 381 and 382, and the bulls did show up, which you can see from the wick below support. Now in the Dow Jones, you have to remember we can go all the way down to 377 and still put in a higher low and continue into this bull trend, because that's the critical risk level for the bulls ever since we had the breakout above 377. So in the Dow, you need to give more room to the downside if we break down below 381, and you need to give room to come all the way down towards 377 to 375. If we break down below 377, then we're getting a deeper correction that could take us back down towards 360. But right now, I think it's a higher probability chance we're getting a higher low and still continuing this bull trend. And this could last for another week or two, so you need to have patience and you need to be following price. On the Russell 2000 IWM ETF, we were down 4.11% today, and we did break down below that support at 196. And we did open another gap to fill up here just above 199. And as you can see from the moving averages, we still have the bull trend and we still have a higher low possibility while we're above 190. Now, if we start to come down here and break below 190, that will look like a lower low, even though we did get a higher high. And that means the buyers are no longer strong, and that would be a sign to start getting risk off below 190. Now, there is support below 190 right here, right around 186, and that rising 20 daily moving average at 184. But again, if we break 190, it's a lower low, which means we are likely going down to those lower support levels. And if you want a low risk entry, you want to do that right here, right around the rising 50 EMA, right around 193. So if we start to bounce from 193, look for the gap fill above 199. And if we break the previous high above 203, we're looking for a price target at 207 and then 214. On the ARKK ETF, we were down 5.6% today, and we filled the gap down here at 48.6, but we opened another gap that is now going to fill at 49.56. So yet again, we have a market full of gaps. In the ARKK ETF, it's as simple as the bulls needing to hold this support right around 48 and then start to bounce towards the gap fills above. But if they cannot hold 48 and they break down below 47, we're likely coming all the way back down towards 45 to 44. So manage your risk right here at 48, and you can get risk off below 48 unless you want to buy the dip at these lower support levels for the hopes of a push towards 52. ARKK is not one of those ETFs I have a lot of confidence in, so you need to manage your risk very well if we start to break down. If you know anything about this ETF, it is very volatile and it has been selling off for many years now. On the VIX, we were up 13.63% today, and the VIX did break out above 15, and intraday we got very close to 18, so you can definitely see there was a spike in fear, but intraday we did start to crush, and the VIX is way outside that upper Bollinger Band. So with the VIX spiking during the pullback, that may be all we get before we continue higher if the VIX starts to crush from here. And I do think there's a very good chance the VIX will start to crush from here and start back down towards 13. If you want to stay risk off while we're above 15, that's completely fine, but you will want to get more risk on if you see the VIX crushing down below 15. On Bitcoin, we're currently trading just below 50,000 outside that upper Bollinger Band, and we're going to stay bullish in Bitcoin above 47,000 because that's the bull breakout. And above 47,000, we could still reach these upper targets below 51,000 and then just above 52,700. If we break down below 47,000, we could make a trip back down towards the breakout at 44,500. But as you can see from this chart, this is a very strong bull trend, and we are going up on increasing buying volume. On Nvidia stock, we were down 0.17% today, so Nvidia held up very well today during the pullback, and we didn't even close down below the rising 5 EMA, so we still have a very strong bull trend. Earnings is coming up next week, and we're likely going to hit at least 750 before earnings as long as we continue to close above 703. If we break down below 703, look for a pullback back down towards 670. On Tesla stock, we were down 2.18% today, and Tesla did get the pullback back down to the critical support at 183, and I told you above 183 you could stay bullish for the upside price target just below 207, but if we break down below 183, we could be coming back down to the bottom of this channel right around 170. We're going to have a price target below 183 between 167 and 173, but above 183 we could still push higher and break that resistance at 197 and close that gap right around 207. So if you're a Tesla bull and don't mind catching a falling knife, this is the time to do so right here, right around 183. But do keep in mind, we do have a bear trend, so this could be a lower high rejection before we make the next lower low and hit the downside price target. On Apple stock, we were down 1.13% today, and I told you yesterday I thought Apple could come back down towards this support between 183 and 186, and then from there I am expecting a higher low as we push higher towards 195. So you can see we did come down towards that rising 200 daily moving average at 183 and start to find buyers, and we now have a gap to fill right here above 186. So in the short term, look for that gap fill, and if we continue higher and we break that resistance at 190, then we're well on our way towards that price target at 195 and then 198. If we start breaking down below support at 183, we could come back down towards the 170s and hit the lower price targets at 177 to 174. So jumping back over the S&P 500, as a trader, volatility is good as long as you're prepared for it. And as we continue to push to brand new all-time highs, that's your time to lock some profits and raise cash and prepare for opportunities to buy the dip. You want to be focused on buying the dip because we're in a bull trend, and you don't want to assume support is going to fail. That would have been a devastating mistake if every time we've reached these supports in the past, you continued to short, hoping that support would break down without any proof from the price action that support did break down. So as you can see, buyers did show up at support, and that is exactly what you expect to see in a bull trend. And I'm going to be looking tomorrow to see if that buying pressure continues, or if the bears become strong enough to break support and end this bull trend. So we'll let the price action do all the talking, as we always do, and that way we can trade what's on the chart and not anybody else's opinions. Remember, I've warned you many times, during every single pullback in a bull trend, there's always going to be people saying that the top is in, and just go check their track record and go back years. I'm not just talking about days. And you will see they do that same thing in every single bull market, and they continue to call tops, and time after time they are proven wrong. Let the trend be your friend, and the trend is still bullish and the price action is still above support, so there's no reason to panic. This is the time where you should be focused on following your trade plan and staying disciplined. And if you don't have a trade plan, you need to go make one and be prepared for any scenario from here, and that includes bouncing off of support or slicing through it and breaking the bull trend. If you're prepared for both scenarios, then you'll simply react to the price action and you won't be an emotional wreck. We are absolutely crushing this market in Bank Trade Alerts, so if you want to come crush the market with us, you can find out how to join Bank by clicking on the link in the description of this video. And in Bank Trade Alerts, you will get all of your buy and sell alerts directly via email and text message, and it's very simple to follow because we only trade TQQQ and SQQQ. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.